Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Great to be here with you all this morning. Seth Udinsky, Samuel Case, and your host, Mark Manila. Mark, it's Wednesday. It's great to be here.
It is great to be here. Welcome, everybody. Glad you're here with us today. You know, Seth, I was just thinking about this. There's some old TV shows I used to watch, and one of them was every morning a gentleman would go outside with a cup of coffee, and there would be a neighbor or two, and they'd just say, good morning, you know, and everybody would just have a happy morning. That's what it feels like coming on the show with all our partners. Good morning, everyone. Good to see you.
Yeah, it really does. It's an honor to be with you guys every single morning of the weekday, Monday to Friday, 9 a.m. Eastern time. And we want to hear from you. Phone lines are open. Give us a call right now, 610-363-1110. Mark and Sam, on today's show, we're going to look at how we maximize our 401k, or at least how we utilize the 401k as a Christian investor, because Mark, I know there's some hurdles that we have to jump through as Christian investors when we're talking about 401ks. Also, we have a Winning Wednesday today. We'll be turning to the Middle East and looking at how the church is moving forward despite heavy persecution over there. But first and foremost, it looks like Trump now has a new mortgage strategy out. Sam, will you give us the details of this? What's going on?
President Donald Trump ordering Fannie Mae and Freddie Mac to buy $200 billion in mortgage bonds, saying the move is aimed at lowering mortgage rates and monthly payments. The 30-year mortgage rates dropped on Friday to near 6%, its lowest level since early 2023. So start off this conversation, Mark. How do these mortgage bonds work, and will this do anything at all to move the needle on mortgages?
Well, mortgage bonds, it's pretty simple. They just package a bunch of home loans together and issue bonds to cover those. So that's what it comes down to. Banks bundle home loans into mortgage bonds and they sell them to investors. And when the demand for the mortgage, for those returns from those mortgage bonds or from those loans increase, yields fall. So by packaging this together, it could affect the mortgage rate a little bit, but a little bit is a lot right now, you know, so that it's actually a good idea. I like the whole idea.
Yeah, interesting, Mark. You know, Mark, what will it actually take, you think, to move the needle back on mortgage rates? And keep in mind, I'm speaking as a millennial who's used to 3-4% mortgage rates. I know there's a lot of people out there who are saying, hold on a second, there was a time when there were 12-13% mortgage rates. 6.5% ain't all that bad. What do you think, Mark?
Right. During most of my adult life, mortgage rates have been around 8%, actually.
Wow.
I can remember, you know, when they got below 8%, I was like, oh, it's time to buy, you know, it's time to get a loan. Kind of like your generation maybe is doing right now with this getting below 6%. So luckily we had that time where interest rates were down at 2-3%, but people got used to that. It's so easy to acclimate to nice things. But the reality is 6% is a very good rate historically for at least my generation and the generation after me. And then we get down to you brats, and nothing's good unless it's below 3.
Quit your whining, millennials.
That's right.
No, I think it's a good thing. I think we need to bring it down. But more importantly, yes, for housing, for you and me and for everybody in the world and in the U.S. to be able to buy into housing, to help it be more affordable. But it's also important for the U.S. government. We need to refinance a lot of debt, and refinancing it at 6 or 8% is crazy when we could be doing it at 2-3%.
I would think inventory is a big problem too.
It is on the price of the house.
Right.
Yeah,
Sure.
Absolutely. But that's what we saw on one of the shows last week when we looked at in the lies of inflation, how, you know, the media has been talking about affordability as if everything's unaffordable because of what Trump did. That's all misleading. First of all, the affordability issue was due to the hyperinflation that we got during the Biden years. We've seen the rate of inflation come down dramatically, but then they counter with, but inflation coming down doesn't mean prices are coming down. It just means they're going up slower. No, we've had prices coming down. Construction lumber has come down by over 50%. Eggs, there's just so many things that have come down dramatically during this first year of the Trump administration. And they haven't even got the hull repaired so the ship won't sink yet. They haven't even got the engine rebuilt. They're laying all new foundations so we can move forward. Think about when all this kicks in and they get that ship running, the economic ship running, and are able to fully turn it around. It's going to be incredible. It's going to be great. Right now, we're seeing the initial impact of it, and it is good.
Yep. I was looking at the whole housing situation. I mean, but you're totally right, Mark, because you just recently got that inflation report, too, where it said, things are a little bit better than we thought.
Yeah, absolutely.
Absolutely.
Yeah. And we need to continue down that path. And I'm hoping we will, because this administration isn't just trying to do optics. They're actually doing things. And a lot of stuff they're doing, you're not going to feel the impact for a while. Think of how long it's going to take to get all the infrastructure together for the AI companies that have pledged billions of dollars into server farms and things like that. That has to get built first. Well, to get that built, it does create jobs and it does other things. So we're seeing the initial impact on it, but the bulk of that is going to hit within the second and third year, within this year and next year. And if the left is not able to derail it, if they're not able to throw enough stupid lawsuits to curb everything, find enough judges to hold everything up, shut down the government enough times that nothing can get done, we could see an economy like never before, and you millennials are going to be very ecstatic.
I certainly hope so, Mark. Hey, if you want to chime in, folks, give us a call, 610-363-1110. Elsewhere, guys, looks like the GDP forecast is jumping. Sam, would you give us the details here? What's going on?
Yeah, Mark, speaking of the economy, the Atlanta Fed's GDP Now forecast, it's more of an estimate than a forecast. It says that the real GDP right now is growing at over 5% in quarter four. That's a major revision from previous estimates of 2.7%. This is not an official forecast. It's rather a running estimate of GDP growth based on the available economic data. Donald Trump touted the news, said our country was dead 1.5 years ago, and now we have the hottest country anywhere in the world. I hope you are impressed.
Absolutely impressed. And, they did say a couple of things in there that was kind of interesting. One of them is real GDP. Did you catch that?
I wanted to ask, what's the distinction between real GDP and maybe nominal GDP?
Yeah, and we don't hear about that a lot. Normally, we hear about nominal GDP, and that measures the total dollar amount of goods and services, the value of the goods and services at current prices. And, unfortunately, that can appear strong simply due to inflation, because if prices go up, well, the GDP expands, right? Because we're measuring the value of the goods and services. So real GDP adjusts that for inflation and reflects true economic growth in the production and output. So effectively, I think they went from nominal GDP to real GDP, hoping it wouldn't be as good. And then they found out it was better.
It was even better.
So, yeah, that's what you get for digging deep, guys.
Yeah, the Trump Uno reverse.
There you go.
Absolutely.
Yeah.
Well, guys, I hate to see this segment go by without taking a look at some wins here. And there is some good things, tough things going on, but good things as well. Sam, give us the details. What's going on with the Christian faith in Iran right now? Yeah,
this caught my attention because, of course, the protests are underway in Iran. President Trump telling them to keep protesting. Help is on its way, in his own words. But I just want to look what's going on in Iran in terms of Christianity, where it's ranked number 9 in terms of Christian persecution. But that's not stopping the church. In fact, Iran is reported to have the world's fastest evangelical Christian growth rate of nearly 20%. It's estimated right now, based on surveys, there's about 1.2 million to even 3 million Christians in Iran. At the same time, Islam appears to be on the decline. A senior cleric said in 2023 that roughly 2/3 of Iran's mosques are closed right now due to low attendance.
Wow.
Man, you love to see that, Mark. You really do.
Absolutely. Anytime we can see people coming to Christ, gaining eternal life, avoiding the judgment of eternal death, burning in hell forever. Anytime we can see that, we have to rejoice. On one hand, it feels sad to me, though, that here's this huge country that is going through such terrible things. But what we have seen is oppression, persecution, oftentimes brings Christ into the mix, because he is hope, he is reality, and that's what we're seeing over there. And I think it's an incredible thing that is happening. And it makes you want to pack up a bunch of Bibles and jump in a car and get over there, doesn't it? I know that's what makes me feel. But what we can do is pray. Pray for all of them in Iran, that Jesus makes himself known to them.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurschools.com. That's reachOurschools.com.
Fear and uncertainty can cause us to hold things tightly and rely on ourselves. But during uncertain times, as believers in Christ, we are called to surrender fully to our sovereign God. Learn a biblically responsible investment strategy proven over 25 years. Keep the money God has entrusted to you out of companies that participate in things that God detests. Fully surrender. Become a Financial Issues Partners today.
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
Folks, today's show brought to you in part by our friends at Samaritan Ministries. Check them out at SamaritanMinistries.org. We so appreciate the work that they do, and being able to be members with Samaritan really is an amazing thing. Hey, Mark, Dave, we see you guys in the queue. Just hang in there. We'll get right to you. We got a line open, folks, so you can fill it right now, 610-363-1110. But, Mark, at this moment, I want to get back on that crash course with you, the investor crash course for the new year. Course, yeah. The question for today, Mark, is how do I, as a Christian, deal with my 401k, and understanding that a lot of 401ks do not offer biblically responsible options? What do we do with this?
Yeah, that's a great question. Actually, it's a wonderful question. And there's so many neat things that have occurred over the last 15, 20 years. You know, 401ks used to be 401ks. They were very boring. You had maybe 4 to 40 different options. Now they open it up to brokerage accounts. They open it up to have a Roth option. And that's the most important part. If your 401k has a Roth option, you should start with the Roth option inside your 401k, if available. Fund that portion first because it provides tax-free. The term here that I really like is free. It doesn't defer the taxes to the future when you're retired and you're no longer producing income. It's tax-free when you get to the future and you're retired and you can take the money out. So effectively, your money is worth more because it's all yours. Tax-free growth and future tax certainty. That's the thing I like there too. We know that you have money and you know what that money's costing you? Nothing. So that's good. So the first step in maximizing a 401k is if you're contributing or if you want to contribute, see if they have a Roth option and get it inside that right away. The other thing is, how do you determine how much to put in a 401k? Well, I always say capture the full employer match. For example, if your employer says, we'll match 100% of the first 3% you put in, I'd go up to the 3% and then stop there. The employer match is part of your compensation. It's an immediate risk-free return. Think about this. If you put, let's say you're making $100,000, so 1% would be $1,000. You put $1,000 in your 401k and they match that, you've just made 100% return day one. And I did a quick calculation for our show yesterday and on the different types of accounts, and I showed even if you had no BRI options and you just put it in the money market there in your 401k and you went and you did $1,000 a year with 100% match, what would happen is after 10 years, you would have averaged a 16.9% or 16 point something percent return on your investments for sitting in a money market and at a nominal rate in that because of the match. So even doing nothing, not even being invested, being in one of the safest avenues in a money market, you would have made 16%. So go up to the match and then stop there. Well, why stop there? Because there's other areas you can fund. For example, if you go up to your match and you still have, God has still given you froth beyond your needs. Well, if the income allows, fund your personal Roth IRA next to the max. That way, you have your personal Roth, which probably has better flexibility and control in the investments, and it's easier to align with your biblical responsible investing. And it's just another way of building long-term tax-free. Did I say that enough? Tax-free wealth. Then consider after that. You might want to consider your additional 401k. Contributions being into the traditional side if you still have even more froth. And it may help you to get a little tax deduction if you're in a really high tax bracket. So let's address the elephant in the room on this, and that's apply Christian stewardships to it. A lot of 401ks do not give you the option to invest in biblically responsible funds or give you a brokerage window where you could go pick individual stocks or things like that. If they don't, they generally have a money market. So you still could fund it up to the match, still make a good return because of the 100% match, hopefully, that they're giving you. So that would still be good. And you're still able to take advantage of the tax-free or tax deferral of that. If they do have options, more power to you. So I would say that the bottom line is start with the Roth, then go to the Roth, the personal Roth, then go back to the traditional on it, and avoid investing in anything that obviously compromises God's tenets of love. And then also, one last thing on this is that I have seen over my years as an advisor to many, many people, occasionally people come in and their credit cards will be really ran up, and we'll discuss that and how it's affecting them and the interest they're paying and all that. And then realize that they're contributing to the max on their 401k in fear of their future. But meanwhile, they're selling out their current lifestyle and they're living at a third of what they could because of the interest on all their debt and everything. So if you're running up credit cards and contributing to your 401k simultaneously, you have to consider, should that money be going to maintain the lifestyle we have until we get our lifestyle under control or not? Things like that. You want to avoid contributing to something at the expense of your giving. You don't want to ever compromise being a conduit of God's blessings. That's one of the reasons for what he entrusts to you. So you want to make sure that you're taking care of your family, that there's peace, and that you're giving, and then you can go into the 401k. And the goal is to prepare faithfully, not just maximize accumulation. Bottom line.
Mark, that's fantastic. So it seems to me that no matter what your options are, even if your company does not offer, like you said, if there's no biblically responsible options, they should be able to still offer a money market option. And that would be a good answer for the Christian who wants to invest biblically responsibly.
Absolutely.
Yeah.
If there's a match, it's a great idea because that match just automatically gives you an immediate return, which even if you amortize that one-time $1,000, it will, you'll see that your return is worthwhile, even over a 10-year period in a money market. So
hard to beat free money.
Yeah, absolutely.
Free money. Yeah.
That's good. Well, Mark, thank you for that. That's awesome. If you got questions about it, folks, give us a call, 610-363-1110. Speaking of keeping your portfolio biblically responsible, Mark, we issued a sell alert yesterday, and we actually got a question in relation to it. So Gary is saying that he did some research on Opera, OPRA, and it seems like it's majority owned by the Chinese, partnered with Google. What do we make of this, Mark?
I'd say good catch, Gary. Appreciate you doing that. Since I've come on board, we started a process of reviewing everything. Every week we look at everything on the buy list, and we look at different sectors from a different perspective. We rescreen everything, and that's down. I actually did not catch that on Opera yet, but we just put Opera on our deep dive list, along with 4 others for this week for us to go into. And your question, your comment came up just after we put it on the list to do a deep dive. So I think you got something there, Gary. Opera is a controlled company with a majority voting power tied to a Chinese-based company. And that means that the Chinese are involved in running Opera. Now, maybe their influence isn't as great as if it was domiciled in China, but that doesn't make any difference to me. If a company is owned by a Chinese company, and that Chinese company owns over 51%, they control the company. They control Opera. Their influence controls the direction, what they do in the software, what they do in their browsers and their games. They control all that and how they use it and what's embedded in there. I'm uncomfortable with being a partner with a company that hates God and is communistic. Bottom line. So, with that said, Gary, and with the deep dive that we did that backs up what you said, we have immediately put Opera, OPRA, on the sell list. And I think it's a good call. First of all, I wasn't very impressed with Opera anyway from the very beginning since I've been on board with their performance or anything else or their direction. And secondly, we don't need to partner with a company that has China government involved in that company that owns the controlling interest in a company that we own. So we're moving on. Now, I would like to bring out a little difference here. If it was an individual, like it was a Chinese individual or somebody who was born in China or something like that, I'd be looking at this differently, because in China, any corporation in China that is incorporated in China has the Chinese government as a partner in it. They are on the board of directors. My understanding is they have that deep of influence, and they're being watched and they're being controlled to make sure they're in line with China's goals, not American goals, not godly goals or anything else. But an individual does not have that same pressure. Yes, if they're Chinese and they're living in China, they have the pressure of the government. I mean, they could come in and say, what are you doing in this company? And we want to use you. But it's not the same thing. I think there's another company we have on our buy list that actually were started by 2 Chinese guys, but they live in America. And by the way, they became U.S. citizens. We're not going to put them on the sell list. It's not the same influence, and it's not the same type of partnership. So good catch, Gary. Appreciate Appreciate you and appreciate all our partners. Thank you for being on top of things.
It's great. Mark, I'm glad that you mentioned that, addressing the elephant in the room for anyone who might accuse us of this. We are not racists, okay? Just because a Chinese person owns a company, that doesn't mean that we're going to sell them. But like you said, Mark, when you have something like this, that it seems like there's government influence there, we have to take a second look. We really do.
Just because somebody has a C in their name or their facial looks a little different, we're not going to sell a stock or judge a stock on that. We're judging it because, very clear, a Chinese company owns controlling interests in Opera. We don't want to partner with that. We're out.
Well said, Mark. It's really good. 610-363-1110. Guys in the call queue, we'll get to you right on the other side of this break. We appreciate you all listening.
First thing.
Yes, first thing coming back. We're going to get to you guys. Fill up those phone lines at 610-363-1110. I hope you all did see that sell alert. We sent it out yesterday. I just got the text alert on my phone a little bit before the show as well, so hopefully you got that also. If you have to leave us, folks, hope you have a great rest of the day. We hope that you'll stick around with us, though, for the remainder of the show. Lots to get to, including your calls on financial issues. If your interest is piqued and you want to become a partner, today's a great day to do it. Just go to financialissues.org and click that Become a Partner button. We'll see you on the other side of this break. More to come after this.
Make a point. No matter what happens, I'll always be there for you.
I know.
(610-363-1110). Give us a call right now, folks. 610-363-1110. Mark, let's get to calls right now, shall we? Let's talk to another Mark. A nice name here, Mark, from Virginia.
Yeah, Mark. Welcome to the show, Mark. Great name.
Hey there, Mark. Yeah, appreciate it. I really appreciate what all you guys do.
Well, thank you. What's on your mind this morning?
Yeah, I've been a partner for over 9 years, and I have been doing great with the stock model, and I'm in the growth and income stock model. And you made a interesting comment on a recent show that prompted me to ask this question. A caller was starting to move some of their positions from towards growth and income towards income as they got closer to retirement. So I'm looking at going into retirement 1 to 4 years from now, and it's a style on the tracker. Is there a good rule of thumb on moving positions from aggressive to growth in income, or from growth to growth in income or income? Is there like percentage of portfolio or any kind of rule of thumb to kind of shift within the same model and within the same sectors?
Excellent question, Mark. But here's the issue that you have to deal with in that. It really comes down to certain things that we can't control or we can't analyze. For example, your sleep factor, your risk tolerance, your sleep factor. As you get closer to retirement, you might, as many people do, start not sleeping as easily if everything's in growth, and growth has gone through the ceiling for the last few years. So you might be tossing and turning at night worrying about a pullback or a crash or something like that. If you start getting those kind of feelings, sometimes they could be out of fear or greed, but sometimes they could just be out of prudence, telling you, out of God saying, hey, let's start stabilizing this portfolio a little bit. Let's start moving to some income. So the amount you move into that is based upon where you're comfortable. Maybe you're saying, well, I don't want to give up all the growth, but okay, so what I'll do is just start moving some in. One step at a time. Here's one I really like in the growth and income. That's a growth and income label that wasn't in my growth portfolio. I like it. It has both growth and income. It's got, I'm going to go ahead and move that in. And then you find 2 or 3 that you just really like, and you start sleeping better at night for another year. And then you start moving more. And until all of a sudden you realize, I'm already over to the growth and income model. It's fine. So it really depends on you and where your comfort level is with being totally exposed to growth alone, which is totally exposed to the volatility of the market. Does that make sense, Mark?
Yeah, it does. So there's not a real, like a benchmark, like rule of thumb, because I am mostly with the style. I know you have to have some growth because you have to keep up with inflation. So I have more growth in income than aggressive or than growth. And then income is probably kind of the second heaviest weighted as far as style is concerned.
Yeah. Yeah. Well, you see, in growth and income, you have growth and income, and then income. So those are 3 different asset allocation models. The growth and income model was made to help people go gradually from growth to income. So now we need a model in between growth and income. Let's call it primarily growth and income.
I'm talking about I'm in the asset allocation model, growth and income.
Okay.
But within that asset allocation model, there's different stock picks by sector. And some of the picks are style aggressive. Some of them are growth. Some of them are growth and income. Some of them are, income.
Just income.
So I'm just talking about the style. I'm in the same model. I'm just talking about the style within that model and within the sector. You have choices.
Mark from Virginia, can I just maybe repeat your question in this way to Mark from FISM? Is it kind of like this, where Mark from Virginia, say you've got 20 holdings and you're in the growth portfolio and 17 of those are growth or aggressive, and then you move to the growth and income. Are you asking Mark from Virginia that maybe I'm looking at more 10 and 10 or 8 and 12, 8 growth and then 12 growth and income? Is that kind of more what you're looking for, like a numeric gauge?
Yes, either numeric or percentage of portfolio.
Okay. And again, I guess we could create a gradual chart on that kind of thing, but the reason we don't is because it is personality and personal driven. You have to decide how much growth exposure you really want in there, what you're comfortable with. Now, a growth and income stock still is a growth stock. That's very important. You realize it is going to be more influenced by the volatility of the market than its income. Just because it's paying 1%, 2%, 3%, 4% even on a dividend doesn't mean that that's going to hold it up. It could help. The dividend helps when it pulls back to keep the returns a little more stabler. But I would be starting to move within the next year. You say you have about 4 years. I'd be picking some income vehicles, straight income vehicles, and start leaning more and more towards that as each year goes on. That way you are actually helping with the diversification, because sounds like you're primarily in growth and income. And that, if you're in aggressive and growth, primarily stocks, and then growth and income stocks, but you don't have very many just income plays, you're really taking a little of the diversification out of it. You should be moving a little more into the income. But there is no strict rule on that, because everybody's a little different on where they're comfortable. I'm very different, and I lean more towards growth than utilizing of income, even at my age. Sam's obviously real young and he's very aggressive.
I don't even think Sam knows what an income stock is.
So there's a lot of
I'm
people,
wild and I'm free. What can I say?
Yeah, there's a lot of people our age, Mark, that really, that are in the near retirement or are in retirement age, that will never go to a strict income portfolio, because they're willing and able to. They have enough money and are able to weather the downturns and not have to worry about lifestyle being ruined by a big dip or a heavy pullback or a crash even. So that's really depending on how much money you have, how are your assets, where's your debt. Yeah, there's so many things that would play into determining whether you would be comfortable with it or not. So we can't determine that. That's something you have to determine step by step. I would suggest that if you don't have much and you're leaning towards the income model, or even if you're just in the fixed income, you should get a little more just pure income plays in it, just for the 6 to 12% returns that some of them have.
Okay, that's very helpful. I really appreciate it. And like I said, I could not be doing this as well without FISM. So glad that God has provided, someone new at each step of the way, from Dan to Shanna to you, Mark. And so very grateful for you and the ministry.
Thank you. And I really do hope that helped. I didn't mean to be vague, but without having a full financial survey of your life, it'd be very difficult to determine that. That's between you and your lifestyle and God. And hopefully the answer was I almost feel like, what was that show? There's a magic show where you try to fool the magicians. But anyway, I almost feel like that, where they keep saying over and over it's the same thing without trying to give away anything. But so I hope it helped, Mark.
That's great, Mark. 610-363-1110. Hey, Dave, just hang on in there, brother. We're coming to the end of a segment. Don't want to shortchange you, so just wait till the fourth segment. We'll spend that for you. Mark, there was a question we got on the chat regarding the Oprah sell. I think it's a good one. Judith from Texas is saying, I read that Oprah has been owned by majority voting power by the Chinese since 2016. Goldman Sachs just put them on their buy list. So because of this, should we wait to sell a little bit? What do you think?
Why would we wait to sell? How much? Let's look at it this way. Let's say that, oh, no, I don't want to go there. That's too harsh. Chuck Swindoll once talked about making cookies or brownies for his kids that were watching TV shows that had foul language, and the kids said, it doesn't affect us. We're mature enough. We can handle that. So he handed them the brownies. They all started eating. He said, oh, by the way, I put a little bit of dog poop in it. And they're all like, oh, that's gross. He said, why? It's just a little bit. You can't even taste it. How much of anti-God, how much of God's money do you really want to partner up with anti-God organizations, companies, countries? The bottom line is, it's pretty clear to me, and maybe it's not to you, so it's between you and God. But man, I just keep thinking, maybe I will share this. What if What if you found out somebody you knew and cared about had been a heroin addict for the last 14 years, but they're still doing okay in life? How long would it be before you'd start intervention in that? And that's the way I feel about this. I think that communism and anti-God sentiment is a cancer in the Christians' lives. We should not be partnering it. The Bible tells us to. Here, I was just really funny. I was just reading this little book here, The Wall Street Awakening. I was just flipping pages this morning. Test all things, hold fast to what is good, abstain from every form of evil. 1 Thessalonians 5:21 and 22. When we find out the truth, when something becomes aware and conscious, and we become conscious of it, I think God wants us to move. He wants us to move in the best way possible. So if you need to move a little bit slower to get out, that's between you and God. For me, I cut ties immediately.
I heard about Jesus in my public school, and my life changed.
For over 25 years, God has used Crossroads Kids Club to bring the gospel right to where children are, inside public schools.
Will you help us share Jesus with kids in public schools? I want more kids to have the same chance that I had.
Would you help reach more children by making a gift to Crossroads today?
Help reach kids with the hope of the gospel. Visit reachourschools.com.
As a member of Samaritan Ministries, your monthly share is a gift that goes directly to a real person.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the church to keep on.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Hey folks, a couple quick housekeeping things here. If you want the Ag Focus, weekly Ag Focus, that'll be up on the website today with Craig Halgard. Hope you'll go back and listen to last week's silver conversation we had with Craig. Really interesting stuff. And then secondly, folks, we have a very special surprise coming this Friday. You're going to have to stay tuned for this Friday. We're
all giddy about that.
Yeah, it's going to be fun stuff. Going to be real fun. The markets yesterday, Mark, were down a little bit, down somewhat moderately. The Dow Jones was down about 1%, a little less than that actually. The S&P 500 down a fifth, and the NASDAQ 0.1 of a percentage point. This morning, the major indices kind of pretty much right at the flat line. They're a little bit below it. The NASDAQ creeping down towards a full percent, actually negative. The S&P 500 down about 2/3, and the Dow Jones is down about 1/5. So a little bit lower than they were in the pre-markets there. Mark, we've got Dave. Dave is calling from Minnesota.
Welcome, Dave. What's on your mind this morning? And thank you for waiting so long. My apologies for keeping you on. We try to get the calls as quickly as we can.
Good morning, Mark. Well, that's fine. I'm sure it'll be worth the wait.
Okay.
So I've been a partner almost as long as Mark from Virginia. So I've been a partner for about 8 years. And certainly I've been blessed by the ministry. And so, of course, I've spent a lot of time listening to Dan Celia and also Shanna Burt. And by the way, welcome, Mark. Glad to have you now. And you've been talking about Roth IRAs yesterday, and I certainly understand the advantage of them. However, I was interested in your perspective compared to Dan and Shanna's, because both of them expressed some hesitancy about traditional and Roth IRAs, not against them at all, but just up to a certain point, and then not continuing to fund fully necessarily. And I think their main two reasons for thinking that were just the general government influence on a qualified account, and maybe even potential control. Secondly, I think they talked about how Congress could change the rules at any time. So, again, just interested in your perspective on those two concerns.
Well, Dave, that's really good. And I think you stated that quite clearly. That is one of my main concerns with any government program, is they can change the rules. But here's where that idea, that concept maybe get a little weak. Did you know they can change the rules on your investing in a traditional account as well? They could determine that capital gains are 50 or 70 or 100%. They could determine that you can only, they can create rules to change everything in our life. That's the government. They have the ability to do that. Not just with the retirement plans, the IRAs and the rules on those. They can change it on every aspect of our financial life. They could outlaw certain types of investments. They could say, we're no longer going to allow REITs. Congress can do these things. So that is something that, yes, I have the same concerns. And by the way, one of the things I don't like about the IRAs is that concern, and that every year they seem to change everything just a little bit. And for years they've been trying to be able to tax capital gains within an IRA, but luckily they want to be reelected too, and so they don't touch that, just like Social Security, Seth's baby.
I love it.
They won't touch that. So I agree with you on that, Dave. The reason I like the Roth IRA, I did not care for the IRA at all, the traditional IRA. The idea of deferring my taxes to a future and compounding them along the way just didn't make any sense. Why not pay my taxes now while I'm young and brilliant and strong and able to make a good living and create wealth, and pay my taxes along the way, so that when and not defer them to the future when I no longer can work, where I no longer have the mental or physical ability to create wealth like I could when I was younger, and have to rely on this lump sum and then have to share it with the government. I don't want to do that. That's why I really like the Roth. That's why when the Roth came in, I was like, this is a better IRA. This makes sense. So I can't tell you about the two of them and, how far left or right they went on those concepts. But I know that the reality is the Roth has so many great features in it and is so etched in stone right now. I don't think our government is going to get stupid enough, the politicians, to be getting into it and destroying it, just like they won't Social Security, because they do want to be reelected again. So that's my take on it, Dave.
All right. Well, that's interesting, and I appreciate that input, Mark. Thanks much.
God bless.
Good stuff, Dave. Appreciate that. Similar question I think we have here, Mark. Joe from Kansas is calling in this morning.
Hey, Joe. There's no place like home. There's no place like home. I'm sorry. Welcome to the show. What's on your mind?
Okay. Thank you. Good morning. Appreciate you guys, all that you do. And anyways, there is no place like home. But anyways, my question is about preferreds. Okay. I'm 74, live in Kansas. I have a Roth. I have a traditional. I have a brokerage account. Pretty much of really close to being filled out through the income portfolio. And my question is on the preferreds. Shanna used to offer people, she would say, I prefer that you put your preferred.
Nice, Joe.
Yeah. And she really liked them to be in the traditional IRA. So what's your thoughts on that?
And that makes sense in a little bit. The preferreds don't have a lot of capital gains on them. It's just the income. So the idea is, why put them in there if they're not going to double, triple in their value and get the tax benefit of that, when you could just put them in your traditional and just pay for the income that's coming in. I understand that, and that makes sense. I don't have any problems with that. I think that's a good strategy. I would put my aggressive and my those things that are going to double, triple in value over short periods of time in there, so you don't ever have to pay the capital gains and you don't have to pay income tax on those. I would put those in the Roth and the traditional primarily. If you only had a Roth and that's all the money you had, there's nothing wrong with them being in there. It's just that the benefit of them isn't as impactful as it is for growth stocks. Does that make sense?
Yeah, very much so. So as an example, then a RIT would be probably a better place for it would be a Roth.
Well, I don't like REITs in Roths because sometimes they have an alternative tax built into them. You got to be careful like that. And REITs can grow. Yeah. A Roth is okay as long as you make sure. What is that tax? The unassociated tax, they call it, or something like that in some of the REITs for income coming from not their core business. So you could get taxed inside your IRA on a REIT if it has that unassociated tax in it. So you got to be careful make sure that's not in the REIT you're putting in your Roth or your traditional. Otherwise, if it is one of those, I'd hold it in your personal account, not in tax qualified.
Okay, great. All right. Well, thank you for the information, and again, appreciate all you guys do, and God bless you.
God bless you too, and make sure you tune in Friday for the surprise that Seth talked about.
Good stuff, Joe. Appreciate you, brother. Well, Mark, not much time left on the show, but maybe time for one more question here. Jesse is 78, and Jesse's looking at the asset allocation for growth and income. He's wondering, why is commodity at 5% and materials at 1%, since it seems like there are fewer options under commodities and lots of options in materials? If they're different, why are these percentages the way that they are?
Well, in general, the asset allocation isn't driven by purpose, but by function, not by the number of investment options. That's the bottom line. Commodities are real assets designed to hedge inflation, protect purchasing power, things like that, where materials are actually individual stock companies, operating companies subject to the volatility of the markets, market cycles, management risk, all the equity volatility. So a 5% commodity allocation provides a meaning diversification within that sector of precious metals, of that commodity. A 1% materials allocation allows participation while avoiding over-concentration already present elsewhere. For example, you might have a company that overlaps into materials, that part of their company is doing it, or it might just be a stock that isn't directly involved but partially involved. So we just measured it out like that, trying to make sure that it balances out in a way that makes sense is the bottom line on it.
It's awesome,
so
Mark.
From allocations about ordering risk, that's what it really comes down to. It's about balancing the risk widely and maintaining peace through the market cycles. And those sectors are set up specifically to help us to do that. It's not necessarily that sector is only that sector. Sectors overlap a little bit in the holdings you have.
Good stuff, Mark. Appreciate that so much. Boy, it went by quick, didn't it?
Yeah, it did go by quick. Are we already done here? I can't believe that. There's no way that went
Turn it
by
off your
so.
mic, Mark.
No, you can't do that, because I want to invite everybody, make sure they're here Friday for that great surprise that we're getting about. And I want to thank everybody for loving God and showing it in the way they invest with biblical integrity. Look forward to seeing you tomorrow and Friday. God bless everyone.
we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.